Our profits after tax have been down by only about 2%. So again, more or less flat with last year to marginally down. Our NII loans have grown by about 5%, and that is largely to do with the fact that our average loan growth was approximately 6% during the year, and spreads have been more or less stable on an average basis. The incremental spreads have obviously been much lower because in the last 12 months we've been doing low risk lending, and obviously low risk lending comes with much lower spreads. Our NIMs have been stable at about 4%. Our average loan spreads for FY14 were about 2.8%. Asset quality so far, has been more or less stable. Gross NPLs were at about 60 basis points, net NPLs at about 40 basis points. But as we've been saying for some time, our NPLs will only keep rising because the risk in the infrastructure landscape remains quite uncertain. And what we've delivered in terms of the NPL numbers for FY14 are by no means a reflection of the risk in the landscape or the risk in our book, which is why we had guided to higher NPLs and restructurings. The operating costs for the year, we've done a pretty good job of keeping costs under control. Our cost to income ratio has actually been down to 14.6% from 15.1% last year. ROAs have been down to about 2.5%, and ROEs for the year were 12.2%. Overall, as I said, keeping the environment in context, a very respectable set of results. And as you know, we've now been given an in-principle license for a bank. And so for the next 18 months, it will be a transition period for IDFC in making sure that the bank is operational within 18 months and we are compliant with all the RBI guidelines surrounding banking when we become operational for the bank.